All right, guys, what is up and welcome back. We are still at Tulsa Trends, and now we have with us David Looney, who is with Legacy Commercial Property Advisors. Okay.
It's a mouthful.
It's a mouthful. It is. We got it out though. And you specialize in industrial.
That's
right?
correct.
So
That's correct.
Today we're going to pepper you with some questions on industrial, just kind of go over maybe some of your points in your presentation that you just gave. So without further ado, Brian.
Yeah, I can go first. I'm really curious. Tulsa's been so hot with industrial properties pushing vacancies to a really, really low level. I think it's below 3%.
Right.
And so just kind of walk through what's causing that and what can people be looking for and how do they take advantage of it?
Okay, sure. Well, I mean, historically, Tulsa has had a relatively low vacancy rate. Going back the last 10, 15 years, it's been, essentially sub 4% for the most part, usually hovering around that 3%. We haven't seen too many years where we've actually been below 3%. This will be interesting when this is coming up. But I mean, part of the reason why we're seeing a lot of that is because of the cost of construction. I mean, that's it goes without saying that's a big driver in this. Because if you're going to bring anything to market, I mean, you better have the pre-leasing done in regards to it. It's just way too expensive from that standpoint. And so that's pushing the delivery of inventory down. You saw it on one of the slides that I put on there. The actual delivery of product is down about half than what it was last year. Now, this isn't factoring in some of those new projects that we put up on the slide and announced those. Those will come in 26. But up to this point, there just hasn't been a whole lot of inventory from that standpoint. So, again, that kind of creates a little bit of a landlord market and a little upward pressure on the rates.
Any industries driving some of the lower occupancy? Lower vacancy?
A lot of that is going to be on the manufacturing side. I believe one of the presenters up there talked about the disparity between logistics and manufacturing, and most of the time, markets are about 15 to 20%. Whereas on manufacturing, whereas Tulsa is about 45%. And so a lot of the requirements that we're seeing are all in the manufacturing space, i.e., companies that need crane-ready facilities. Again, that's kind of a big one that we've leased up several buildings that have crane in it. But I would think that had we had another couple 100,000 square feet of crane-ready buildings, they would have easily been leased up. It's just it's a product that's not necessarily on the market. It takes a lot of investment and infrastructure into that. We're looking at a new construction project on the east side of town, and it takes a willing tenant that is going to participate in that, because most of the time a landlord doesn't want to take the investment of the cranes. And so, we're seeing quite a bit on the manufacturing side. You see it on the heat exchanger companies. Again, they continue to expand. We're the heat exchanger capital of the world.
Yeah.
And so. Not necessarily from a logistics firm or company, demand. We don't see that as much. It is good seeing some of these projects coming out of the ground, like at Green Hill and the All-Star Sports Complex redevelopment. And logistics has been down across the board nationally, and so it's a little bit down here as well, but still. We're still sitting at 3% overall.
It's great.
Nice. Wanted to touch on something that you mentioned, and one of the big stories around here is we're hearing about these data centers, multiple data centers, and can you give us some of the facts and figures about those? I mean, how many centers are we talking about? What's the total investment, and what you think the impact might be on industrial and maybe any opportunities that come from that?
You bet. So currently there are 7 data centers that are on the books right now. 5 of those are actually under construction. Site work is being done. I drove a couple of those sites here recently. Matter of fact, the one out, Project Anthem, I drove by there yesterday because I had a little bit of time before a meeting. So that is at 11th Street and the Creek Turnpike in East Tulsa. So it's in an area called Fair Oaks Industrial Park, and so I think that's all owned by Robeson, a lot of his land out there. So that's a 340-acre development, $800 million on that. It's presumably it's going to be for Meta on that. Again, they already have the substation already built out there, doing a lot of site work. But the interesting part when I was driving around yesterday, and it really surprised me. So we've heard a lot of rumors that this is just a small phase of this. We have heard upwards of about 2,000 acres is going to be developed out for Meta over there. Now, again, nobody's coming to the table and saying that, but when I was driving on the other side of the Creek Turnpike, making the turnaround, I saw the contractors' vehicles all over that area, and so this may be something that happens a little bit sooner. So I mean,
that's just one of the data centers, right?
Yeah, that's 5-fold from where it is right now. And then you look at Google Stillwater. That's a massive $3 billion facility that'll be done over 4 or 5 different phases, and each phase is, a few 100,000 square foot of buildings. You look at Google Prior and their expansion, and another $6 billion in that facility. We have some clients that do work out there, and it's remarkable just the amount of service companies that have to service those and be out there, work those. It's not so much the employment at those locations, it's all the service companies and what they provide. Yeah. And then you look at Core Scientific down in Muskogee. It's a $4 billion development down there. They just completed a lot of their site work and a lot of their agreements with their customers on that particular one, which is again another great deal. But that is under construction. The project Clydesdale up in North Tulsa near Owasso, that's under, all the site work is already commenced on that. And then you've got another project that was just announced a couple of weeks ago called Project Atlas. It's don't have any figures in regards to it, but it's down in Coweta, and if it fits the same as Project Anthem, I mean that's another $1 billion, another a few 100,000 square feet. And then the last one was announced on Monday. Don't have any data on it, but Google is opening a third campus in Oklahoma, and that's going to be in Muskogee. Wow. And again, I don't have the size of that, but in looking at all this, the interesting part is, as I had mentioned, it's not necessarily the employment that goes with those, and the construction is out. I mean, amazing. It just the amount of jobs and the amount of overall construction and the private investment into it. But it's all the support companies that need to be in and around that. So, I mean, you've got maintenance companies, you've got HVAC companies that have to come in there, you got rack space groups, you've got, computer software and companies that need to come in there and service all that. And so, you go from, a $3 billion project and you may end up having several $100 million worth of additional development opportunities in or around there, or at least in a central area that could do a hub and spoke and serve all those. So it's going to be interesting to see. And, most of the time when you look at a lot of these projects, you're going, God, how many of them are really going to make? Yeah. I mean, you hear all these big numbers, all those things. How many are really going to make? Well, when you have 5 of them that are already under site work or under construction, that tells me that they're moving full speed ahead.
By massive companies too. These aren't small companies.
That's right. That's right.
They're gonna happen.
So certainly an exciting time from an industrial standpoint. We may not be intimately involved in the actual data center construction, but I think there's going to be some great opportunities for developers, for brokers, and other owners in and around these facilities.
Yeah, super exciting for Tulsa and for Oklahoma.
Right. And, one of the things in regards to that, we have the power, we have the water, we have the land, we have the right political environment to really make these happen. The incentives are there to be able to do that. All those natural resources are there. So
cheap as well.
Cheap. And that is driving a big chunk of it. I mean, for years and years, we heard that they're going in, Virginia and Georgia and a bunch of other places. Well, we're seeing that here, and I think we're going to see more of that as we progress.
Nice. And that doesn't even include the lithium plant, ammunition center, aluminum smelter, right? I mean, we've got all kinds of projects. It's amazing. I've never heard of it like that ever in Oklahoma, at least the time I've been here.
And the aluminum smelter plant is probably the one that I was most interested in. Just started kind of diving deeper into this as I was putting together the report. But I mean, you got a $4 billion investment, private investment on that.
That's the UAE, right?
That's UAE, U.S. Trade deal. Great for our overall area. It's going to be out at the port of Inola on 400 acres out there. One of the stats that Andrew Ralston with the Tulsa Ports had given to me is that currently they have 2 million tons of barge traffic in and out of that port right now. This is going to increase at 1.4 million just out of that plant alone. So, I mean, 70% more barge traffic out of that. So it's...
We better get some cheaper aluminum, I'll tell you what.
Yeah, that's right.
Yeah. And there's 2 types of companies that need to be in and around that. It's the primary aluminum users and the secondary. And I mentioned off the primary ones, but there's a lot of the other secondary ones. But all these primary ones have to be in close proximity to where this is because of the transportation costs, different things like that, the quality and such. And so, I see some opportunities there for additional large-scale companies coming in and around that, in addition to all the supply chain going into it. So,
nice. Well, we probably got to get you back to the question and answer.
Yeah, you've got a panel to get back to, so we don't want to keep those people waiting. But thank you so much for hopping on.
Really appreciate the insights.
It's super interesting.
Yeah.
Thanks, David.
Thanks, David.
Yeah, appreciate it.